This is your LMAX Exchange technical update for Wednesday, December 14th, 2016. Euro dollar. So the euro is back to chopping around after it looked like it was ready to break down below that 2016 low from the previous week at 105.05 and towards the multi-year base from 2015 at 104.63. At this point, the pressure still remains on the downside, however, and there's risk for any rallies to be very well capped in favor of an eventual drop below that 105.05 low and towards 104.63. We would need to see a break back above the recent high from the previous week, that high that took us all the way up just close to 109 towards 108.75 to take the immediate pressure off the downside. Sterling dollar. So cable has seen some rallies over the past several weeks out from the 31-year low down around 120, but at this point the rally is still classified as corrective, with the market confined to a broader downtrend that needs to take out a previous base at 128 to force a more significant shift in the structure and take the pressure off the downside. Dollar yen. Dollar yen has raced up through psychological barriers at 115, continuing through 116 this week, although the market is now starting to look a little bit extended on the daily chart and could be poised for a more significant corrective decline. At this point, support comes in at 111.36, that's key support, with a break below to expose more significant support down at 107.50. But at this point, the structure has shifted to the bullish side, and setbacks are expected to be very well supported in favor of continued upside. A short-term corrective pullback is on the horizon, but again, the market should be very well supported on dips now. Euro Swiss. Euro Swiss has been under pressure over the past several days since breaking down below a 108-110 range, and this puts the focus on a retest of the 2016 low at 106.24. Aussie dollar. So Aussie has seen a minor correction in recent trade, but overall this market is now pressured to the downside, with rallies expected to be well capped and a fresh downside extension seed towards next medium-term support at 71.45. Dollar CAD. So dollar CAD has seen some intense setbacks over the past several days, though overall the structure here is highly constructive, and the market should be looking for that next higher low, ideally above 130, in favor of the next upside extension beyond the recent highs at 135.89 and towards 140 further up. Kiwi dollar. So Kiwi has been in a correction over the past several sessions, but here it looks like the market's putting in a top off the 2016 high from back in September, just shy of 75, with a break below medium-term support at 69.52 to confirm and accelerate declines down towards medium-term support at 65. SPX 500. The S&P 500 continues with its relentless push higher to fresh record highs, most recently clearing key resistance in the 2250 area and now exposing a test of 2300 further up. At this point, it would take a break back below 2180 to take the immediate pressure off the top side and suggest the market could be in for a more meaningful shift. Gold. So gold has seen some intense pullbacks over the past several days, but the market has now traded down into some critical, meaningful, longer-term support, some internal support, which comes in roughly in the 1130 to 1180 area, and the market could still be putting in a longer-term base here if it holds above 1130 in favor of that next major upside extension back towards and above the 2016 high at 1375. At this point, it would take the establishment below 1130 to negate that basing outlook and expose a retest of the critical multi-year base from 2015, just over 1,000, which ultimately could expose a 1,000 test and below.